In the late 1700s, Europe was a continent of kings, wars, and growing empires. Money decided the fate of nations. Armies moved on gold. Governments survived on loans. And behind the scenes, a new kind of power was rising. Not on battlefields, but in counting rooms and private banks. At the center of this financial transformation was one family, a name that would become legendary in global finance: the Rothschilds. This is the story of how one banking dynasty rose during a time of chaos and helped shape the foundations of modern central banking. Before modern central banks existed, Europe's financial system was unstable and unpredictable. Each kingdom had its own currency. Governments borrowed heavily, especially during wars. There was no unified system to manage debt, control inflation, or stabilize economies. When rulers needed money, they turned to wealthy private bankers. These bankers financed wars, trade, and infrastructure. In return, they gained influence, access, and power. But among them, one family would build a network unlike anything the world had seen before. The story begins in Frankfurt, Germany, in the mid-17th century. Mayer Amschel Rothschild was born into modest circumstances. He began as a coin dealer, carefully studying rare currency and building relationships with wealthy clients. But Mayer had a vision. He understood something others did not, that the future of power would not belong only to kings, but to those who controlled finance. Through discipline, intelligence, and trust, he began lending money to powerful families and regional rulers. And then he made a decision that would change history. He sent his 5 sons across Europe. Each Rothschild son established a banking house in a major European city: London, Paris, Vienna, Naples, Frankfurt. Together, they created one of the first truly international banking networks. At a time when communication was slow and risky, the Rothschilds used trusted couriers and family coordination to move money and information faster than governments themselves. This gave them a major advantage. They could finance trade across borders. They could transfer money between nations. And most importantly, they could lend large sums to governments. The early 1800s were dominated by the Napoleonic Wars, one of the most expensive military conflicts in European history. Governments needed massive loans to fund armies, supplies, and defense. Private banks stepped in to provide financing. The Rothschild network became known for its ability to move gold across Europe quickly and securely, helping governments manage wartime payments. This strengthened their reputation. They were no longer just bankers. They were financial partners to nations. Over time, governments began relying on major banking houses to manage debt and stabilize their finances. This period helped shape the early ideas that would later become central banking systems, institutions designed to manage national debt, issue currency, and support financial stability. As the Rothschild family's wealth and influence grew, so did stories about their power. Some believed they controlled entire economies. Others claimed they directed governments. But history is more complex. The Rothschilds were not central banks. They did not create central banking alone. And they did not control national financial systems. Instead, they were part of a larger transformation. Their success showed governments the importance of organized financial systems, stable lending, and coordinated money management. Their methods influenced how nations began thinking about national finance. But central banks were created by governments, not by a single family. During the 19th and early 20th centuries, countries began creating official central banks to take control of their financial systems. These institutions were designed to manage national debt control, the money supply, stabilize economies, support banks during crises. Private banking families, including the Rothschilds, played important roles in financing governments and shaping financial practices. But over time, power shifted. Governments wanted control over their own money systems. Central banks became public institutions, responsible to nations, not families. By the early 20th century, the role of private banking dynasties began to change. Financial systems were becoming more structured. Regulations increased. Governments took stronger control over national economies. Central banks became the primary authority over money, interest rates, and financial stability. Private bankers remained influential, but they were no longer at the center of national monetary systems. The age of family-led financial power was gradually giving way to institutional control. Today, central banks exist in nearly every country. Though their names and structures differ, their core responsibilities remain the same. They manage inflation, ensuring prices don't rise too fast. They control interest rates, influencing borrowing and spending. They supervise banks, protecting people's savings. And in times of crisis, they act swiftly to support the economy. Their decisions affect everyday life, from home loans and job markets to savings and investments. Yet most people rarely notice their presence. They work quietly, behind the scenes. As the world becomes more digital, money is changing again. Cash is slowly being replaced by electronic payments. New technologies are reshaping global finance. Some nations are even exploring digital currencies issued by central banks. But the core purpose remains the same as it was centuries ago: to create trust, to maintain stability, to protect the economy. The rise of the Rothschild family is one of the most remarkable financial stories in history. A tale of strategy, trust, and global ambition. They helped shape the world of international finance during a time when nations desperately needed structure and stability. But the central banking system was not created by one family alone. It was built over centuries by governments, crises, ideas, and the growing need to protect economies. From private gold to public institutions, from family networks to national systems, the evolution of central banking changed the world forever.